And the short answer to why house prices keep going up is supply. One of the things that's contributing to the demand for housing now is an increase in population. We've seen a return to immigration levels that we had pre-pandemic. Housing is a component of overall inflation, but we target inflation. We don't target house prices.
Well, this is going to be a hard pill for most of you to swallow if you don't want to be perpetually broke for the damn rest of your financial existence, trying to get into this housing crisis, especially here in Canada, where we're going to be discussing ourselves, trying to strategize and buy a condo in Toronto, our thoughts around it, some of the financial rules that we're following to pull this off, and then we're going to talk about what solves the Canadian housing crisis. And it's not going to be what the government wants to hear, but I think it's a damn good solution from some random lady on the street someone interviewed. But even with a $200,000 salary, it'll take 27 damn years to afford a Toronto house. Get ready for my rant, because the bank recently released its Q3 Canadian housing affordability, and in this breakdown of Toronto affordability, revealed that household would need a very high annual income of $205,000 with a whopping 330 months worth of savings, or 27.5 years, to come up with that deposit for a $1.19 million home. And that's putting about 10% of your salary away a year. No one's doing this. This is so generic and dumb. Most people are living, millennials, bouncing between parents' basements, doing everything they can, putting like 80-90% of their gross income away just to come up with a deposit if they want to live here. But honestly, I'm not buying a house. I would never buy a house here in Ontario. I think it's dumb if you're going to spend $1 or $2 million on a home. Think about it. You make 10% in the market on $2 million. That's what, 200 extra grand a year. That's basically retirement. Leave the province, guys. You want to buy a nice house? Go to Alberta. Go to Newfoundland. Don't do it here. We're just trying to make things affordable. I liquidated a massive chunk of my portfolio. I'm not showing my fiance's side of the portfolio here, but we've been following a lot of strategic rules to make this comfortable so we can have that luxury of living near our family. But it's not easy, and it's not financially responsible to just go and spend on what we can afford, especially in this high interest rated environment. So we're putting a massive like 70% down payment on these properties, because I think even on a $1 million property, $200,000, if you put 20% down, which doesn't make sense anymore, and you had an $800,000 mortgage at 6% on the current interest rate before principal, you're crazy. You're crazy. It doesn't make any financial sense. Don't do it. I know it sucks because even rent here is out of control. You have to do bidding wars on rental properties and spend over $3,000 a month, $40,000 in basically income just to even rent a comfortable place that isn't a basement apartment. I mean, it's so ridiculous. And we'll talk about what solves the problem, but this isn't going to be what you are going to appreciate. But these are the fundamental rules I've taken into consideration when we're buying real estate. And we're going to talk about the 30-33 rule here, some stuff from Forbes, and then what you're really going to hate is Dave Ramsey. But $7,000 of your gross income, if that's what you're making, let's say after tax, let's say you're very fortunate, or you're a couple like in our circumstance, and this is kind of what you're bringing in. Your monthly payments on your house, which your mortgage payment, should be more than $2,100 using the 30% model. I'm even cheaper. I think all housing costs, utilities, maintenance costs, your water, all that stuff shouldn't combine more than 30% of your gross income. But this is the 30-33 rule is an expansion of the 30% rule that says not only should you have more than 30% of your gross income go toward your mortgage payment each month, but you should have at least 30% of your home value saved in cash, which makes this even more impossible for most people. But I do attest to this. I think you need a large sum of capital left over if you're buying these insanely exuberated prices here in the city of Toronto. But 20% for your down payment, that doesn't make sense anymore. You need a lot more than 20%. Doesn't make sense to be paying these high interest rates. I know that really cuts a lot of people out of the market that might want to get it. Now, essentially, that'll leave you with a healthy cash buffer, and your home value should be no more than 3 times your gross annual income, and that cuts a damn near large percentage of people from buying a home. And again, I think you can play around with this, because let's say you even make $100,000 a year. This is saying you shouldn't buy a home that's worth more than $300,000. But if you've saved up, if you've been frugal, I think with a larger down payment, you can again adjust this rule, because this is presuming you're only putting 20% down. But because obviously right now there's still like things out there for first-time home buyers that you can put as little as 5% down on certain amounts, and it's just like the government really wants to pressure people into getting into the market. And I think it's only going to do detrimented value to them. And let's talk about Dave Ramsey, because this is the true way I believe you should invest, not only in personal real estate, but obviously even, investment real estate, but paying cash. And this is crazy, and this is something we were considering doing, but from a tax perspective, it wouldn't make sense for us. But yeah, you read this right. You should always pay in cash, according to Dave Ramsey, in full anytime you buy or renovate investment properties. And again, he's more or less speculating on the investment side of it, not the personal side of it. If you're buying personal real estate where it makes sense, he recommends that you pay it off within 15 years. And that's something that I attest to as well. But now our advice might be the opposite of what you'll hear from some real estate investing gurus, because God, borrow the money from the bank. There's no such thing as good debt. Debt will always equal risk. I 100% 100% agree. The riskier your investment, the more likely you are to lose everything, and that's no good. And I think people have gotten real comfortable with utilizing the banks. I watch realtors galore. Grant Cardone, you're talking about Ben Malla. And Ben Malla, he's been selling properties, struggling, trying to get things adjusted because no one anticipated this high interest rate environment. And that's where investments become stressful, when you're managing the insanity of dealing with tenants and all that stuff and things that I just hate doing in general. I like passive income. I don't think real estate's passive. I think it's a job. I think if you want to become a billionaire, you don't do it through real estate. You do it through starting a business. Look at Mark Zuckerberg. Look at, Elon. Name one real billionaire out there that's sitting on the top 10 S&P 500 that did it through real estate. None of them. Real estate is something that most people can get into, and if you enjoy it, you love it, it makes sense, do it. But do it with as minimal debt as possible. And again, I know most people are going to attest that. These are just my opinions. I think it's the fastest way to becoming a millionaire. Think about how much cash flow you'll generate with no bank on your back if you go somewhere affordable where you can buy homes for $100,000 or $200,000. But paying in full also sets you up to make money sooner. Obviously, instead of repaying a lender, you get to keep all the profits. That's how to invest wisely. He talks a little bit about diversification, staying local. Don't be buying real estate just because it's affordable somewhere in the States. If you live in Canada and you don't know what you're doing, be prepared for risk. Obviously, renting out properties. I mean, people forget sometimes incidents happen. I know people that own rentals, they accidentally caught the kitchen on fire. Then you're at a rental income for God knows months, insurance, and you're waiting 6 months to get the repairs done. All that crap can come into play. I'm not trying to detest you from buying investment real estate. I just do agree with Dave Ramsey. It should be done with cash, and people are going to hate that. But let's talk about solving the crisis. The US, Canada, we're starting to see a little bit of a melt up in prices because there's nothing on the market right now. We're waiting for these people not to be able to afford their mortgages to unload onto the market, and it's not really happening the way we were expecting it to be. The market is proving insanely resilient, especially here in Canada, which is mind-blowing at how expensive the real estate is. But this wonderful lady gives some real clerical insight into what actually solves this problem, and it's kind of simple, way more simple than you'd think.
How do you think the government can address the housing affordability crisis in Canada?
I think the government is bringing in immigrants and refugees, which I think is wonderful and great. But you know what? We don't have the infrastructure. And I say, put a hold and get houses built for these people. We're getting tens of thousands and hundreds of thousands of people coming in the past 5-10 years. And there's no place to live. Where are these people going to live? Trudeau keeps bringing all these people in and there's no housing. And the food banks are dry. There's nobody giving to food banks. He brings these people in and they don't have jobs. So how are they going to live without housing and without jobs to buy groceries? It's just absolutely insane. And it doesn't take a space rocket scientist to figure that out. My parents came as immigrants. My father came in 1928. Right the next day he started his job. He had a job to come to. He came from Croatia. Now these people come here. They don't have a house to come to. They don't have groceries. They don't have a job. They don't have language skills. Even learning a language is a problem.
It's so
This is brilliant. Canada's catch-22 situation is through immigration, right? It really bodes well for the monopolistic giants on the stock market, your banks, your telecom, these food giants, your Metros and Loblaws of the world. But really, it doesn't benefit the actual economic infrastructure we currently have set up, bringing in over 500,000 people, a year right now? We're over 40 million in the population, and there's just no housing affordability, and it's going to continue to get worse as more people compete for homes. And honestly, I always kind of come back to this fundamental truth that, again, this is kind of like Dave Ramsey at the base value, is if you want to become a millionaire, and the quickest path to doing so is zero debt, no auto loans, no student loans, none of this crap. You want to get a house paid off within 15 years, and you want enough investments and passive income and dividends to basically float all of your expenses, and then from there you can really justify building out a really healthy and sustainable lifestyle. And that is going to be harder and harder to achieve in this current environment, and you have to be diligent. Hard times make strong people, and younger people are facing some of the hardest times they're ever going to face beyond any generation, from the cost of education, cost of housing and food, and affordability, which means they need to be diligent, they need to be malleable, movable, and that is just where I kind of stand at this point. And honestly, you can attest it. You can think mortgaging into rental properties is all this and that, and it's great getting that cash flow to pay for it, but I think you're wrong. And that's just my opinion. You don't have to agree with it. You don't have to do what I'm doing. I just do what makes me comfortable.